Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Hey, guys. I am so pissed right now. Okay, so I have a Samsung phone, and sometimes they force updates on you. Like, it warns you, and you know, like, if you say, no, don't do it right now, and like 3 times, then it says I'm doing it anyways, so it does it in the middle of the effing night. And then my phone was on, but like the alarm did not go off. So I'm 30 minutes late. It super pisses me off because I'm super proud of like never missing a day. But we missed 30 minutes. It's okay. And I'm going to miss a little bit more because I should go and eat something. But first, let's go check out the charts. It kind of looks like our trade is working well here. Let's so here you see ZN. We're not at the lows of yesterday, but you know, things did go a little bit low overnight. Treasuries are just reeling. But you really got to look at it on the ZB, because the ZB got just annihilated yesterday. And look at that increase in the spread. Look at the increase in the 2 and 10 here on this day, right? Like, this is one of the largest changes in the spread that we've seen all year. So the yield curve is definitely still moving, even though it kind of seems like we kind of been sideways for the past 2 days. The S&P, on the other hand, took 2 days in a row down, 2 1% days in a row, which hasn't happened in a long time. So I don't know, is that good or bad? I'm kind of like felt like that we were a little bit too high, and to some extent I kind of wish that we were back at like 4,000. To be honest with you, I just feel like there's too many stocks overpriced. It's hard to find good deals, you know. So maybe we need a haircut. I don't know. There's a bunch of headwinds coming up in this next month, guys. There's a lot of headwinds. So oil, one of those headwinds still above $90 a barrel. Gold and silver, well, they're recovering okay. Actually, silver is actually up from all of this. That's crazy that silver is actually able to get above the high from Wednesday. And copper recovering too. You know what? That decline yesterday in copper was a little wild, so I guess it doesn't surprise me that come back. Okay, Bitcoin also taking a haircut yesterday, although not dropping below their most recent prices. The dollar still right around 105, so marginally higher. Is the yield curve steepening? Yes. So if I just come back over here, okay, when you look at this chart at the bottom, that is the chart of the 2 and 10 yield curve. Up is steep, down is flat. Okay, because steep means buy the front month, sell the back month. That's up, and the flat means sell the front month, buy the back month. It's down. Okay, so this going up, steeper. Yeah, and speaking of headwinds, just again, note we've got the UAW strikes possibly next week. Well, already happening basically, right? A government shutdown, it sounds like it's almost certain to happen next week. And then in October, we get the resumption of student loan payments. So the economy is kind of, well, it's going to be weird. I would be on the lookout, though, for the yields to flip around perhaps next week. Like all of these gains in yields that we've had this week may be given up very quickly if things kind of start to turn down. Yep. And then the oil prices as well. You add all of that up. It's like there is concern about inflation coming back. But the thing is that, probably oil is going to be around 90 for a while. And if the economy starts to take a deeper, if the S&P 500 rather starts to take a deeper dive here, it's probably going to do so before oil really becomes an issue. So it's really more of how much of an issue is just oil at 90 right now. Well, oil at 90 right now actually is a pretty big issue though, right? So, especially with student loan payments and people already struggling. Like this is the thing that I just keep seeing is that by a lot of metrics, the economy should be strong and people should be doing very well, but that is just not the majority of people, because the reality is that most people are not able to quickly negotiate a better wage within the space of 2 years, and so they're still kind of like treading water. People on the higher end of the curve, like if you're in tech and whatnot, like you can switch jobs every year or every 2 years and very easily negotiate your salary up to that, keep up or go faster than inflation. And those upper ends of the scale kind of cancel out those lower ends of the scale. So when you look at it, it's like, oh, well, like income overall is going up. Yes, but for about 50% of people, they're just still screwed. They're not keeping up with it, right? But there's one other thing that happened that it has been able to offset that, and that is that during the pandemic, people saved a lot, right? They had more money because they weren't going out as much. They didn't have to drive into work. All of those things, the people that were still getting paid, of course. And the government was just straight up giving people money. And so people paid off debt. So people's debt levels decreased significantly during the pandemic. And then afterwards, they've basically been using that extra credit room as a cushion. It's just that, like, they're starting to run out of that cushion. Like, debt levels are back to like their historical percentage of disposable income sum. But I don't think that I can conclusively say F747 that the inflation is going to go up. I can only say that we have like inflation what it is right now. It's 3%. If the economy goes into a little bit of a dive, that would be enough to, at the very least, cause the Federal Reserve to not raise rates again this year. Right? And that's kind of the first key point that we're looking at is this combination of factors, we talked about like 4 or 5 different things, going to prevent the Federal Reserve from raising rates? And I think that there's a very good chance of that. Yeah? So, let me just come in here, double check. I don't think we really have... Oh, okay, so we do have the S&P PMI numbers at 745. That's a relatively significant number, but the market usually doesn't react to that too much. But since it's the only thing today, that's probably going to be important. Let's just come in here really quick. I think next week is kind of like a little bit more of a dead week, right? Well, we do get GDP, of course, PCE, U of M, Friday. And then, yeah, no non-farms, because that will be the following week on Friday the 6th. So next week is going to be a little bit quieter on the economic front. The market may continue to be a little angry, though. Like the sell-off that we're having, I don't think it's just a 2-day thing. There's going to be like some massive repricing going on over the next month, let's say. So, yeah. All right. So I need to go and find some food. So I will leave this up and running. I'm just going to make the screen, basic here. so you can see what's going on. And I'm going to go and get some food. So I will be back in maybe about 15 minutes, okay? Oh, and you know what? We should also run a commercial right now. That YouTube likes that. Okay, we're back. How are you guys doing? Anything interesting happen while I was... No, absolutely not. Holy crap, this market is tight. That is it. I tell you what, it is always the most jarring thing to me to see the treasury market go from like just total insanity on Wednesday, and then 2 days later, 4-tick market. Like, what the heck? Oh my gosh. But when it starts out like that, we do not want to trade it. That can be a difficult market. We could try playing the game in the queue. We could. We could try playing the game in the queue, but I don't think that that's a very good in this particular, especially not on a Friday. Can you show Dom on the why? No, that'll just encourage you guys to trade NQ. I want you to live. Levon, I want you to live. Don't go to NQ. That's where accounts go to die. Oh, wait, what are you saying? What are you talking about here before that, though? Banks can't take rates. Keep rising. I think that's true, but it's also not true. Like, these banks are getting just absolutely destroyed by the higher rates, but it appears that the Federal Reserve has enough facilities and is like dedicated enough that they don't necessarily have to go under. But we'll see. But then the other thing you're saying, so they are really trying to time when they do the next hike. I really wish that was the way that it works. But I'm afraid that the reality is probably more that the individual Federal Reserve members are all kind of winging it on a meeting by meeting basis. You know? But the question right now is, do they hike in November, in December? I don't think that they're going to do it in November. And I'm concerned that by the time we get to December, that we're going to see enough weakness that it doesn't happen. In fact, man, it's kind of funny the way that it works where it's like, okay, you get through a certain gate point and then all of a sudden the possibilities for the future open up again. Because before this week, I just, trying to predict what might happen in November and December was just like, who knows? I have absolutely nothing to go on. Okay. But now the scenario that I'm concerned about is things continue to be hunky-dory. The Federal Reserve does raise again in December, and the market is really upset about it. And you get a December where they sell. Now that might be a little bit of my PTSD, because in 2018, December of 2018 was holy crap. Just insane. Absolutely insane. Because they sold basically things are kind of hunky-dory, and then the Federal Reserve raised rates when they didn't want them to. And we were all like, this is crazy, why are you doing this? And then the market sold through the whole Christmas break. It was just absolute carnage during what is usually a completely dead time of year, right? Absolute carnage. I'm a little concerned that we could have a situation set up like that where there's enough question about should they raise rates or not in December, and they raise and the market's pissed. But I think the more likely scenario is that by the time we get to December, it seems very clear that the Federal Reserve should not raise rates. So I think so here's my take. Okay. I think that there are certain kind of economic factors that will have a larger impact under current economic conditions than they normally would. And so economists are kind of underestimating the impact of these. So one that I think is really important is the effect of student loan debt. Okay, because we already have like really high demand right now, essentially. Like, we're at a time in world history, quite literally, the next 10, 20 years, where demand will be higher than at any other time in human history. No joke. Because this is the time when both boomers and millennials are going to be spending a lot of money. Millennials have just kind of come into the spot where they can kind of afford to spend some money. Like, they're real households now. They're not just kids starting out in their 20s, right? That doesn't mean that everybody's gotten to a stable spot. Unfortunately, I feel really stable. I feel like, you know, we've got a lot of money to manage, and I'm you know, very meticulously trying to manage it and save away as much of it as I can, and it's a complicated job. There's a lot to keep track of. It's just, you know, but yeah, we spend a lot because we have to, because we have kids and stuff like that, right? My parents, they still spend. Okay, they're not like, they're almost retired. They're not quite retired yet. Okay, that's what you're gonna get into. Once we get past that, you won't have the boomers anymore, and the next generation that kind of comes into the fore, the Gen Z, are not as big. There's not as many of them. So we are literally at a time in the next 10 to 20 years where demand will be the highest that it will ever be in the history of ever. Because what we learned from demographics is that after that, the world population peaks. We know that in China is already not as many people as they thought, and that their population is going to be aging and declining significantly. India is going to become like the most populous and biggest spending nation on earth, right? And then after that, after they peak, because once you kind of start to become a developed nation, your birth rate goes down, and then it will be Africa, but it will never replace the spending power that millennials and boomers have right now. So this is kind of all downhill from here, folks. The peak of civilization, maybe. Is India already number one? Okay, I apologize. So demand is going to be high, right? I forget why I was making that point. Had a really bad ADHD moment there. Treasury is coming down here now. That's the start of the S&P 500 for that. So how did I get from... Oh, okay. So I was trying to explain why certain economic factors are going to be more impactful in this current environment than they normally would be. Okay. So if demand is at all-time high, you got to remember that markets are inelastic. So that extra little bit of demand coming in has a really big impact, especially when supply is already tight and demand is already kind of overwhelming it, right? So when you take the student loans off, and all of those kids in their 20s have the ability to also spend big, that really affects the economic activity. And vice versa, if you take that money away from them and then they have to be paying it off, that's a really big tightening. So the estimates that I've seen is that it's like 0.5% on GDP. I bet it's actually more than that. Maybe not quite 1% of GDP, but I think that might have more than 0.5% impact on GDP, like what Goldman and the other analysts say. I also think that the stimulus that we get from having student loans paused has had a much larger impact on GDP than economists are currently think. Okay, well, with rates coming with the treasuries selling here. I kind of think it's just the open. We do have some news in like 5 minutes, so let's kind of see what happens there. I'm a little concerned that like we get a little flurry of activity going into that and that, but then after that it just kind of dies down. Oh yeah, and then there's the government shutdown that's coming. So this one is kind of interesting because I'm not seeing a whole lot of people talking about it. Like normally, if I get on Reddit, I would see a bunch of people trying to set narratives before the government shutdown happens and all of that. I think that a lot of everyday people are going to be blindsided and like, oh, wait, what? We're having a government shutdown now this week? What? Yeah. And it's going to be interesting because here's the thing. We gotta talk politics here a second, guys. I kind of feel like that Friday should be like politics and social stuff, and Monday should be like long-term investing. I think I want to do it that way. So, social stuff. A lot of time, one of the things that you will hear among people on the right, like if you go to patriots.win or whatever, okay, so they will say that Republicans and conservatives are controlled opposition, they're cucks, they never do anything useful, they're never going to accomplish anything, yada, 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 right? Okay, that's the narrative, okay? I do not believe that the Republican Party is, quote, controlled opposition, at least not intentionally. I think that they're conservatives, okay? And what conservatives tend to be risk adverse. So that's why you see the Republican Party leadership almost always take the safe route, because conservatives are just prone to being risk adverse. That is until you had Donald Trump, where you have somebody in charge that is just willing to take huge risks, like starting a trade war with China. That was a huge risk. It was a risk that unfortunately we didn't get to see play all the way out because Joe Biden won the election. I'm very curious. I'd be very curious to know. Well, and the pandemic was also kind of short-circuited. If the pandemic had never happened, Donald Trump wins the 2020 election, I really wonder what would have happened with that trade war thing. Would China have given in? I don't know. That was a risk that he took. Kind of didn't get to play out, right? So I guess you could say that you lost to some extent. Okay. Well, starting a government shutdown, that would not be something that's risk adverse. There's actually a lot of risk associated with that, okay? Because Americans might not understand or agree with the Republicans that it's necessary to quote unquote shut down the government, right? So there's a big risk involved with it. So then why are Republicans doing it? Well, the problem, if you want to call it a problem, is that we now have conservatives in Congress that are very ideologically wedded to the idea that we need to decrease government spending and starve the beast in any way possible. And so from their perspective, they're not thinking of it as taking a risk for the party. I don't think that they're considering how this could possibly negatively affect the party for the upcoming elections or any of those things. They're just thinking we have to do and use whatever kind of leverage that we have in order to reduce government spending. And that's what's going on, right? Now, to their credit, it's pretty insane. Like seriously, we have this problem, government shutdowns, credit limit, like concerns about the US defaulting on debt, those sorts of things, okay? And they say like, this is crazy. Well, it is crazy. But like here, I've been thinking about this. Here's my idea. Here's how we solve this problem. What if we reduced government spending? Right? But of course we can't do that. That's the thing that's so wild about it, is that you literally have to hold the entire government hostage to try and convince the Democrat Party to reduce spending, and then like usually it doesn't work. We don't actually reduce spending. We get some sort of piecemeal sort of deal that like appears to reduce spending but doesn't actually, because they're just changing baselines and stuff. Like, oh my gosh. It's crazy, right? So from that perspective, are these Republicans going to give in? No, they're not. They're not. So we're very, very likely to have a government shutdown. Very, very likely. What did Tim Pool do last night? I'm kind of surprised how popular Tim Pool has become, because I just don't know. I don't know. I don't understand it. Which people? Okay, Joe Rogan. I understand the Joe Rogan thing. Okay, he's just a nice guy to talk to. I would love to be interviewed by Joe Rogan. I think everybody would. But a lot of these other people that are popular, I don't get it. And it just feeds into the conspiracy theories in my mind that social media is fake, and that the people that are at the top of the game in social media are not actually there because they're the best content creators, but because, of nepotism and other things going on that. Okay, Matt Gaetz, and he was on describing government shutdown. Well, we should note that it is going to be like a shutdown, which means that this is like, and Biden will probably pull all of the same crap that Obama did when it happened under him. Probably even worse, which means all of the monuments are going to be shut down, like any way that they can make it seem like, painful for people, they'll do so, right? To make it as big of a deal as possible that the government is shut down. He is trying to stop Well, because they tried multiple times to do a continuation resolution. They're basically at this point just going into like, let's put a bill together that's like as popular as possible, which means get all of the Democrats and enough Republicans to go over and stop it. Because McCarthy, again, McCarthy is not a risk taker. He's not. He's looking at this and he's like, yeah, a government shutdown is going to make us look bad, probably. And not just because the media always sides with the Democrats on these things. I don't think that the public will understand that it's worth it, basically. Let's see here. A tweet from Nick Timmeros. Among the sell-side forecasters and other professional Fed watchers, no one has really changed their views on the next step since August. A few see a November hike, but most think that July was the end. Yeah, this is really odd that the Federal Reserve still thinks that we're going to have a hike in December, basically. Because the market doesn't think that it's going to happen. So if they did increase, it would be a little, that would kind of ruffle people's feathers. Market would be upset. I just need to run for a house, do nothing, and make millions. Well, okay, being a legislature is a lot of work, okay? These are busy people, they do work. Honestly, so here's the thing that frustrates me, to be honest with you, is that I really don't feel that we enable, especially members of the House, I really don't think that we give them the resources to really be effective. I don't. I mean, yeah, they can hire staff and all of these things, but like if I were to run for office, and then win, like That would be really problematic, right? Because I don't, am I going to move my toddlers to Washington, D.C. and all that sort of stuff? It's just like you're uprooting your family and living in Washington, D.C. And then you're disconnected from the people that you're supposed to be representing, right? So I constantly come on. I'm not advocating for more government spending, but I am basically advocating for members of Congress to be paid more. Yes, I am. See, I always come out on the opposite side of the public on these kinds of issues, because I really feel that, like, the window that I got from being involved in politics, like regularly interacting with people that were in these positions and or were running for these positions, and when you look at it on the inside, they should probably get paid more. Yeah, because what is right now? It's like $250,000. Okay, like what you need to think of it is like they should be paid like the high end salary, which in my mind is like $200,000 a year times 2, because they have to run 2 households essentially. So really, members of Congress should make like $400,000 a year. What about the millions first of all, they don't steal, but they trade. They trade for sure. And well, come on. They trade, and they also get like like speaking engagements. There's all sorts of business things that they set up, right? But like that's the thing, man. What if they just were secure enough that they didn't feel any need to do those sorts of things? Right? Like the first thing that you have to do is you have to pay them enough that they feel secure and that they don't really see the need to do that. And then you can turn around and you can pass anti-corruption laws that shut all of those valves off. There's no way that you're ever going to get it past that. Like for instance, this stock ban. Basically force all members of Congress to have all of their money in. Oh, by the way, we get in the news. I'm totally off here. Services PMI 50 spot 2 versus 50 spot 7. Manufacturing 48 spot 9 versus 48 spot 2. And composite 50 spot 1 versus 50 spot 4. So the services is a little bit less than expected, and it is less than last month's, and so that's causing a little bit of buying, but it's not too big. Okay. Anyways, they weren't able to pass this stock ban, right? Well, you're never going to get it passed unless they're already secure, frankly. Because I know people, okay, like case in point, Jason Chaffetz, okay? Jason Chaffetz was a good legislator. I really wish, because it sounds like Mitt Romney is going to be quitting this year, so we have an open Senate spot here in Utah. So far, the people that I see like running for the spot, I'm kind of like, okay. Jason was good at it. He knew what was going on. He knew how to be a legislator. He was good at it. He quit because it was too much for his family. He quit because they weren't making enough money to be able to do everything they needed to do for Congress and still like be able to raise his family. Maybe he comes back. Like, he's a lobbyist right now. Maybe 10, 20 years, like when his kids are all grown up, maybe he comes back then, right? But you've created a situation where good people don't run. So I was saying, like, we're not enabling people. Good people don't run because they don't want their lives destroyed by all of the political scandal and crap that happens. They can't afford it. They can't afford to run a campaign. They can't afford to win because that would just disrupt their lives too much. And then if they do actually take it, they aren't given the resources to really like dial in their life and perform their best. What's this? Great has no bounds. Yeah. Here. I think that people are a little more complicated than that, though, right? Like, I really think that if you set up appropriate systems that encourage people and make it easy for people to behave in a certain way, that can be pretty effective, right? The issue that we have in our system today is that every incentive in the system is set up for you to abuse it. In particular, every incentive is for Congress to just spend more and more money, even if we don't have it. So going back to how did Fetterman work the loony bin? Well, I'll tell you how, Octavius. Did you know that Fetterman went to Harvard? He's a trust fund baby, man. You'd never know it from the mustache and the, the hoodies and all of that sort of stuff that they go through, right? But that's all just cosplay for him. He's a trust fund baby, cosplaying as a working class person. That's how he did that. Okay, question. If you're using onRender to render candles for an indicator like your spread indicator, would that make the add line? Okay, so what is the add line command that you're talking about? Oh, how did the Hearst test went? Oh, dude, it was actually really interesting. I wouldn't say that it worked, but it was interesting. Let me pull it up. Like if you open the factory RSI indicator, it has an add line command in the set default stage of the code that draws your overbought and oversold lines. And you're saying that if you're using onRender, would it prevent those lines from happening? Oh, okay, so it depends on how you do it. Yeah. It does. It could. So if I come in here to speculators at 3 and we pull up something there where I'm doing that, like yield curve, for instance. So here in yield curve, I do on render. Okay. And when you overwrite on render, basically, the default on render doesn't happen and it uses your on render, right? But you see that first line right there? What I do is I actually do the base render first. So the things like the lines and stuff like that, as long as I'm using the base on render, I think that those should still work. That makes sense? You're overwriting the method, but then you're calling the base class version of the method at the very beginning. Okay, so where did my... Here's the strategy analyzer. Okay, it was Hearst right here. Okay, so I modified the strategy a little bit to just be like in a holding period. So it when it takes a position, it will hold it for max 90 minutes. Okay. Now, when you look at the performance of it, the Sharpe ratio is 0.1, so it's not a very good strategy over the long run. But it is profitable, and I would even say relatively consistently profitable. Oh, actually, you know what? I don't think that it'll take a little while for it to show the report, because in order for me to run these stats, I had to make the change so that it doesn't keep memory of all of the trades for every strategy. So it has to like redo them all over again here. What do you think about quant trading? Well, I think quant trading is not technical analysis. Let me put it that way. But it is going after the statistical nature of the market most often. And that can make it difficult to find an edge. But here's the thing. Like what we're doing is I want to just trade one instrument, you know? I want to trade just one instrument and be able to adjust to what that instrument is doing on that day. And I think the reality is that, especially from like a quant perspective, that's super crazy hard. Like it's basically either HFT or you just don't do it, right? When you start to get into quantitative trading, it's much more tends to be much more along the lines of managing a portfolio of things, trading a number of different instruments, like, out of the world of stocks, pick 10 stocks, that sort of a thing, right? Quant trading is much better suited to that. What we do here in the futures, this is where it comes back to, again, like, you either do HFT or you have to be informed, essentially. You have to be a speculator. So, that's kind of part of why whenever people say, like, oh, let's do this strategy, let's do this strategy, I'm always acting, let me turn this off. I'm always super confident that, like, the results aren't going to be very good. Because I know that trying to run an algorithm like that on a single asset is just going to be like, it's probably not going to work unless you have like a really complicated algorithm. I mean, there's a possibility that we could have some sort of a thing that says, based on the volatility and all of these other things and whether there's news this day and that sort of stuff, pick which strategy to use, right? Because one point that people make is like, well, you're making strategies that only work in one kind of market. Cool. Then you have to know what kind of market you're in. And how do you predict that? You can't. Not with real efficacy. You might be able to say, okay, now at this point we are definitely in that kind of market, and then maybe I can take some trades on it. That sort of a thing. But to make an algorithm like that, it would have to be like, there'd be like 6 different types of market conditions and like 12 different types of trades. And it would be more complicated than I have the resources or attention span to make right now. Yeah, it is a decent run up. I have this covered up, but we really moved up here. We are getting Beds Collins speaking here. I think we're going to get like a speech transcript. She's just saying higher for longer. What I'm seeing right now is the Japanese yen pushing again. So it seems that once again the Japanese may be intervening in the market, because I can't, especially not on a Friday. I don't think there was anything in the news that kind of suggested that we should move up in the treasuries. But it's been a pretty solid trend up, and about 10,000. Actually, it's actually about 20,000 contracts long. So that would maybe have been a trend that I would maybe have wanted to play if I had anticipated it, and if it wasn't a Friday. Anyways, where was I going? I wanted to say something about this. Oh, yeah. Okay, so when you look at this, though, the performance of this strategy matches pretty closely with the performance of the S&P 500. So I'm going to say it doesn't work. You are making money, but you're taking on a lot of risk to do it, and it just doesn't make sense. Like, just put your money in an index fund. There's no reason to trade that. The consistent, like what you would like is a really high Sharpe ratio. That's where, if I'm going to make less money than the S&P 500, yeah, but my Sharpe ratio is really high, right? So this doesn't make sense to trade it, even day trading. I guess if you really, really want to find a strategy that like is just profitable over time and you can afford to lose, what is the max drawdown on here? And you can afford to have a drawdown of $81,000, then go for it. But I would say that it works better than about 99. Okay, so can I close this now? Or I'll just minimize it. So this came up on Reddit yesterday, and now I was just thinking about it, and it was kind of funny to me. Because the question was, are most strategies unprofitable, or is it just that people do things that screw them up? Right? Well, I would tend to say that it's that most strategies are unprofitable. Because what usually happens is you start losing and then you start doing stupid things in response to you losing, right? But, and here's the weird part, right? We don't know all possible strategies, right? Theoretically, there's an infinite number of possible strategies. So how do you come in and say most strategies of most of infinity is unprofitable, right? Or to what Jiwi said there, how can we say out of all strategies that are possible out there that strategy is more profitable than 99% of them? We can't. So we don't know enough about infinity you can have like a percentage of infinity, I think, but like how would you determine that? There's no way to determine that. Okay. So really what it is it's not of all possible strategies, it's of strategies that people have tried, right? So is that more profitable than, I'm not going to say 99, but maybe 95% of strategies that retail traders try? Yes, it is. And I find it particularly curious that with just a moving average, that I'm able to get performance that pretty well mirrors the S&P 500. I think that's really weird. So I was kind of looking back and I just wasn't sure what I wanted to apply it to. I think that what I need to look at is and I don't even remember the name of him. I think it's Joseph. But I had one that was based on a cyclical indicator, and you were just constantly retraining it and forward testing it. And I think that I may have been using R squared on that, and I kind of want to go back and say, okay, what if I use the Hurst exponent instead? Is that more or less effective? And what if I use them together? That might be weird, right? So the strategy itself is not profitable, but I feel like that the Hurst exponent does show some promise. It does seem to be doing what you said, which is like it's basically only getting you in when it matters. So yeah, I would say that it actually was a good exercise, and I'm glad I did it. I don't know if I have the time or interest, because now I'm going back and I'm like, oh, you're gonna waste, a day or a weekend backtesting something that's not gonna work and yada yada yada. But okay, so let me answer SHC's question first. What's your opinion about Apex trading or earn to trade prop trading firms? The targets that the prop trading firms have you do are very aggressive, and any strategy you're trading that would get you funded within a month or two from trading is likely to blow up in the long run. So I don't really think that the prop firms really make sense anymore, because there's micro futures, and what I would encourage you to do is to just save up a few $1,000-$2,000 and just trade micro futures. You can come in and you can trade micro yield futures, and if you have $1,000 account, even if you're consistently losing money, that account is going to last you years. So okay, so to Jiwi's comment here, I don't think it's just semantics, because this is the key thing. Is let's just assume that actually the majority of possible strategies out there actually are profitable and worth trading. We just haven't discovered them yet, right? So really what then the question is, why is it that the majority of strategies that we try are bad, right? Because I think that at the end of the day, what it comes down to is that we as humans tend to be attracted to things that are just not going to work. Okay. I've been talking to Jigsaw about this issue where you can't see my position. So I think we might do a screen share with them to try and figure out what's going on. Yeah, I've done the drop firms when we first started. So if you go back into some of the first videos that I posted, you can kind of see where I talked a lot about it. Because I made a video about why I wasn't going to try to do the prop firms anymore. That was very popular and kind of like first started the channel being popular. So I've been wasted more than 10. Wow. Yeah. Well, so the other thing, SHC, is, you know, if you go and you fund your own account, trade at Sim for a while. Like, I would say trade at Sim for at least a year. Yeah, I thought if I cannot pass the prop test, I am not profitable in a real account either, but that was not true. Yeah, that is totally it. Oh, okay, I think that, I don't know if we're actually going to be, he's just going to go and look at things. So let me just type here really quick. He's I think it's Peter, but he didn't get on like a call. But he's moving my mouse right now. What was I gonna say? Oh yeah, like ASHC. I'm so glad that you kind of realize that on your own, because like that really is the thing. Is that's where I think that they're deceptive. Or not. I mean, they're not like intentionally trying to do it, but I feel like we've kind of set up a culture in trading that works against you, because the culture that we've set up is that that the prop firms is the gold standard, that the prop firms is what the performance that you should be going for. And it's not actually true. The performance that you're going for with the prop firms is extremely aggressive, and it will push you towards extremely aggressive strategies that are very likely to blow your account. And so if you like say, oh, I'm going to start trading my own live account with that, you know, and then you blow the account. Because the thing that I find is the most common way to get funded with those sorts of things is to find some sort of mean reversion strategy, and then have a really small target and a really large stop, and even pyramid with it. And if you do that, you try enough times, you probably get funded. It's just that, like, when you have the bad day, the day where, like, even though it seems statistically impossible because you win 60% of the time, but then you have the one day where you just lose 10 times in a row, you'll blow the account. It happens. And it's really eerie, but it always seems to happen. Let me open up the Explorer here for him. Oh, he's taking it again. Agreed. And if you're lucky, it works 3 months, you make enough to trade options, and that's where the real money is. This is so funny. Yes, it is. I do kind of wonder sometimes, like, should I be working towards trying to play options more often? Because I saw this, man, did you see, there was 2 of them yesterday. There was one where a guy had turned like a $4,000 position into like 100,000 or something like that. That one was pretty good. But then there was this other story where the Cisco bought a small company, and some guy bought $22,000 worth of options before it happened, and it's now worth $45 million. Whoa, that just kind of blows my mind. It really just kind of blows my mind. Like, yeah, 45 million. I didn't see this one on Twitter. I saw it on TikTok, so I would have to do a little bit of a web search, which, you know, Peter is still, I think, messing with my, yeah, I probably will be investigating. I saw somebody say this in the comments, and I don't know if it was true, but they were saying that, like, there are certain thresholds and options that, like, they will automatically, the SEC will automatically investigate, and that it might even, like, be put on hold. Like, that you can't do anything with the position or access the money until it's, like, until they, like, free it or something. Now he's not doing anything again. And I'm like, well, do you want to see the logs? Do you want to see the logs? Because we can go and see the logs. Uh-huh. There you go. Look, there's the logs. You want the logs? No one cannot ever invest that level of money without information. You would think. But there are really rich people out there willing to make big bets, right? So you know what it reminds me of is so I own a stock called Rare Earth Resources, REEMF. And they are essentially the only rare earth mine in the United States. And they're not even a mine, like they're trying to become a mine. And their big thing is that they're building a processing facility. And they believe that they have a processing method that will allow them to process the rare earth minerals while still staying within the boundaries of the you know, EPA standards and all of that sort of a thing, right? Okay, but so they just got the money, they had the money to build the thing, right? And something that happened recently was that they got a permit approved. Okay, so when the permit got approved, like, the stock took off. There was also at that time some headlines from the Biden administration relating to rare earth minerals. So, like, Mm. Ugh. Okay, I forgot what I was like just talking about. Oh yeah, I was talking about rare earth minerals. Okay. Anyways, sorry. So like a couple of months ago, like all of the board members and stuff bought options. And I was like, okay, how unusual is this? And it was like, well, actually they do that sort of thing all the time. Like executives will do that sort of thing all the time. And then the news came out, and I'm kind of like, no, it kind of seems to me like these executives, when they think they know something, they buy it. So next time around, if I see them do something like that, I think I'm gonna follow. Next time, I think I'm gonna follow. But you know, I just hold the stock. I've done really well with it. Maybe I want to add more. Okay, do you pray something? No. I mean, I pray regularly and I pray for help for my positions, but at the end of the day, I don't think that God is going to switch around a position for me. I feel that would be like a so to me, prayer is kind of more like trying to align your what you want with what God wants, and not trying to get God to do what you want. You know, and so like praying to have God like flip your position or around or something is ridiculous, right? Because the answer that you're gonna get is basically, nah, this position sucks, you should get out of it. Yeah, well, I live in Utah. We're Mormon. Everything's Mormon. Weird things going on in the Mormon world lately. I don't know if we should really go into it, though. Oh, you like it, Mormon? Really? Because I feel like that the internet doesn't like us. Was the cleanest church you ever visited? Oh, do you live in Korea? Because I really want to go on vacation I want to visit Korea. And I keep saying I'm gonna learn Korean, and then like I don't do it. Like there's all these things that I want to do, right? And you know, like trading and the stuff that I got to do for my YouTube channel and everything, that kind of goes at the top. And one of the things that I would be doing if I wasn't doing trading is spending more time learning foreign languages, but that one's basically at the bottom of the list and always falls off. There is some books and guidelines. Well, what I did, I don't want to go and get it. It's over on the bookcase there. But like I went and made a thing about the alphabet. Essentially, was going to memorize the alphabet letters and then try and work from there using free apps and stuff. But yeah, because you know, for a while I got pretty far into Chinese. At least in terms of like learning things, that's Chinese. You got to memorize a lot of shit, man, because Chinese is such a terse language. So like memorizing what the words actually are, super hard, right? Korean's a little bit better in that respect, I guess. But, you know, I thought Chinese because I was like, well, you know, China's only going to become more important and you know, eventually they're going to make their markets open to us. And so I would want to be able to read Chinese and like trade Chinese bonds if I could. Right? Maybe not so much now. I don't know if that's ever going to happen. It seems like that China is kind of declining. So why Korean? Because I love watching StarCraft. I know it's so dumb, right? But I love watching the Africa StarCraft Brood War Remastered League. It's just so great. That's instead of watching basketball, because I gave up on pro sports in the United States. There's just too much stupid stuff going on with it. So I watch StarCraft 4 times a year. It's great. I'm not good at it, no. Maybe I'm okay. I don't know. Like when I was a kid, so like the thing is that when I was a kid, we played it a lot. We played it a lot. But you know, we would play silly things like we would play like fastest minerals maps and things like that, you know. And so we thought we understood the game, but now I go and I watch these pros and I really understand the way that the game is played and like what the meta is, you know. And you know, I realized that I knew a lot, but I didn't really know anything. And, you know, it was really just like you were the best amongst the people that were there, but you weren't anywhere close to like serious, right? So I kind of every once in a while I'll be like, I'm gonna play it and I'm gonna like start playing it regularly and stuff. There is a new real-time strategy game coming out this year that could be a big deal, and then I'll probably start playing it a lot, right? So I was like practicing StarCraft, and like I would go in and I would like play a game or two and like get things to go the way that I wanted and win a game or two, but then kind of stopped playing and forgot about it. I just got too much. Like the problem I have right now is I got 2 toddlers, and so it doesn't really lend itself very well to playing games like StarCraft where I'm going to be sitting at the computer for hours a day, and you know. If you're a Mormon, I don't drink coffee. And I can't read Korean at all. Wait, I can try putting it into Google. Let's see here. It's like from Korean to English. I think there's more to be gained playing games than watching sports. Yeah. Hello, I am Korean. You seem to like... Oh. he said things that would be really easy for me to translate it. Dude, I love it. You're not the first person to come into the stream that's from Korea. I think you're actually probably more like the third. There's one guy that's fairly regular that is from Korea, but you know, people, it's really interesting how people will filter through the stream, because I wouldn't expect the average person to want to watch me on stream every day. Some of you guys like Uzi that are like, we're just really good friends now. But, you know, I think most people, they're going to come in, they're going to learn the things that they need to learn, and then, you know, they'll go do other things. But I loved your videos, and your face is really like a legit trader. And your eyes are like a... Well, one of the things that I've got is that I've just got no guile, and you can see, like... You can just see right through me, right? So if I'm really passionate about something or I don't really care about something, it's really hard for me to... I'm just not very good at hiding that sort of stuff. And that lends a lot of trust. You know, people really trust me because they know that even if I wanted to lie, I would like not be capable of doing it, or at least I wouldn't be very good at it, you know? You look too healthy because you don't drink alcohol. I was so there was people talking about this the other day, that like Mormons have this sort of like glow or something because they don't drink, but they were saying that it was creepy and eerie. ZF is on the rise. Yeah, so the 5-year moved up more, didn't it? I am still... I don't know, guys. I really don't like taking trades on Friday, and I really find this action a little bit bizarre. But there have been other times where I was a little bit more dialed in, and I tried to follow it, you know? Have you ever questioned? No. Yes, no. Hold on. The Snooze Squawk is saying stuff. So this is Bowman's comments. I don't know if that's why the market is moving here. I don't know, man. Did the one of them say something and I missed and I didn't realize that it was significant? I don't know. I still kind of suspect that the Japanese are performing an operation. How were the back tests? Yeah, here, let me pull it up again. Here's how it performed. So the Sharpe ratio is really poor on it, so I would not recommend trading it. But it was net profitable. Although when I say net profitable, it's like it follows the S&P 500, right? I bet you, if you want to do something real quick here, if we go and we trade ZN and we just change the stop to be like 16 instead. No, I'm gonna have to escalate it to support. Is it a trend? I don't know. Well, probably it will just keep going until the Japanese are done, if that's really what it is. And who knows, maybe they're already done. Does look like we're forming another liquidity hole up here at the top. Anyways, I was gonna say on religion, like, so, and this might be something that sounds kind of a little bit okay, but like part of faith is just like, you know, just going with it, like, even when you have doubts and stuff. Like from my perspective, it is, you know, it's the religion of my ancestors. It's the religion of the place that I live. And, it's important for you to have ties to your community. And so to me, I think it's beneficial to be a part of their religion and to believe and to exercise the faith. And the human mind is, because in all honesty, the whole idea of religion is a big contradiction from how I approach trading, right? Because in trading, I'm like, you have to have empirical evidence to do things. You're going to put your money on it. Shouldn't you have? Yeah, it's down net. See, the performance of it, the performance of the strategy is just matching the performance of the instrument. But it's just interesting because when you just do like a standard moving average, that's not what you would get. Anyways, religion, it's not an empirical approach to things, right? But there's this crossover, right? You want to base your things on empirical evidence, but when it comes to trading, there's still this point at which you have to kind of take faith and take risk and stuff, And the thing is that the human mind is very good at compartmentalization. Like the way that I think of it is your brain is a neural network, right? But it's a neural network that is able to reconfigure itself over and over again, right? It can say, here's the context that I'm in. I use this model, and it loads that model into your brain, and then the cells work that correct way. That's the way that I think of it, right? And so your brain can compartmentalize and can say, okay, when we're in the religious context, this is what we use, and when we're in the trading context, this is what we use, right? It is beneficial to you in your life to be a part of a religion. And I mean like a part of a religion where like you go to church every Sunday and you do stuff with the community. Because the benefit is largely community. Okay, yeah, let me see what you're talking about here, Gus. This is interesting. Using position side versus risk and the accuracy of this strategy. 50% chance to gain and 43% chance using always 5% of the total portfolio. Simulation ends if the PL is negative. Oh, so that's kind of like the test of how much risk you should take in doing like a Monte Carlo simulation sort of a thing. Yeah, it sounds like the Kelly. That's exactly what I was thinking. Optimal and Geometric Growth paper by Marco Lopez is a great paper to show the downsides of Sharpe. Okay, sure. Well, like, so here's the thing about Sharpe ratio that I think is so funny, okay? Sharpe ratio is super, super flawed. Yes. But you know why you get so many researchers putting papers out about the flaws with Sharpe ratio? Because there are all of these funds out there that get like insanely great Sharpe ratios and then still like blow up or don't perform well. And it's like, well, why is that? Okay, well, because they're kind of gaming Sharpe ratio. And so now you go through and there's like, can we make an even better metric that's even better than Sharpe ratio? Okay. But, and here's the big but, is that for the purposes of what we're doing and for like a retail trader trying to evaluate a strategy, Sharpe ratio is the most common, available, easiest way to try and perform a risk-adjusted measure like that. So get a strategy that looks good on the Sharpe ratio first, and then go and look at those more advanced metrics. Because I highly, highly doubt that you're going to get like, it was absolutely terrible on the Sharpe ratio, but the strategy was actually good in this other metric shows that it's good, right? It doesn't happen like that. So, you know, when I look at when I look at a strategy like that, and I'm like, the Sharpe ratio is only 0.1, that just means it's not really worth your time. But the strategy does perform in an interesting way, I could try combining it with indicators that I know are a little bit better and see how it performs. You're missing out on a lot of... I am. I really am. It's just not stopping, is it? Like, is it this gonna like retrace? No, not quite. Retraced all of yesterday. I could see maybe we could get to 109. Like, again, I think that what we could say is that some of my kind of biases that I have to keep me out of trouble kept me out of a good trade today, right? Because I said, well, it's a Friday. I don't have any reason to think that the flows are going to be a certain way. It's probably best for me to not do anything. I'm going to focus on you guys and not take a trade. Well, that was the wrong call. It looks like maybe something is happening in the Japanese yen and it's just like not backing off. And so I probably could have taken a trade almost anywhere within here and made money. But that's okay. The filtering is insane. Yeah, well, what I want to do now is I got to find one of these strategies. One of the problems is that the strategies where I spent the most time were the order flow ones. So I don't really have very good ones that are like, 10-year time period and they're actually good and only using price. But I think that there's a couple that I could do, and I should be able to like use that in place of R squared to see how well it works, and or possibly combine it with R squared. That's another thing that I think is interesting. Does NinjaTrader allow for tick data / time independent? Yes, it does. Although I would very strongly recommend against using those in your backtests. Because those bars kind of, because you will get more bars in fast action, it biases your algorithm towards taking trades in busy markets where the results are less likely to translate over to live. Basically, like, your algorithm ends up selecting all of the trades that could work theoretically, but in when you try and run it live, you don't get filled. They don't work. So in a nutshell, politics and religion robbed you. Well, maybe. Do you think that demo result? Well, so if you're coming over here and you're trading on Jigsaw with the Jigsaw simulator, okay, that translates over to live pretty close. In fact, you will probably do better on live than you will on the sim because it's stingy with fills. That's fair. It's just candles really undersample during important action and print chop when the market is moving slowly. Yeah. Well, so the first thing is like if they undersample, that just means you need a more granular time frame. Like you need to do 30 seconds instead of a minute or whatever. But see, from the perspective of technical trading, it's a problem, and it's like when you have volume or tick bars, that should like filter out noise and make it more clear to see things and stuff. But again, it's just like when I backtest and I've done things, it just doesn't. It's better to just use time-based bars. Do you think the Jigsaw is worth it? I do. So the first thing you got to realize, because the problem with Jigsaw from the cost perspective is that you have to pay up front and you pay a monthly fee. Okay, the monthly fee that you pay is about what you pay on any other platform anyways. Like it's only like $5-7 more than what you pay for Sierra charts every month if you want the Sierra charts with all the features. Okay, But then there's the big amount at the beginning. I guess I don't really think about it because I paid, $500 like 7 years ago, and I've been using it ever since. And so to me, it was like almost like a cheap, to me, it's almost like a cheap cost. No, I don't pay extra for API. I might at some point, because at some point I do want some of my algorithms to be plugged directly into the broker. So the plan I got here, so I really need to start thinking about this stuff. I feel like I'm just not getting as much done as I need to. I traded basically since 2016. So 8 years, 7 years. Yeah. Anyways, so I have a day job. Okay, from the trading, I make practically nothing. Okay, like I'm trading single lot micros. Okay, so even though we've been trading, we had a drawdown. We're digging ourselves back out. It's actually like the third or fourth time that we've dug ourselves out of a similar hole, so I feel okay about it. Like I think they will eventually get out. But even if I was like doing super great and was performing the way that I want, it would still only be like $200 a year that I'd make from the trading, right? Okay. The YouTube channel, when you combine things like the advertising and the affiliate links, you make a lot from the affiliate links, but you're not talking about enough to live on. You're talking about maybe a few $100s a month, right? So I have it, and all of that money goes back into the stream. Like I buy equipment, and as I was saying, so like the next big thing that I got to do, or that I want to do, is buy a computer. I actually have it all saved up, and I'm just kind of waiting for the sales to come along in December. But we're going to build a new machine that's going to be more of a number crunching machine. I have a rack so that we can have both of these machines together. And then I want to do something where we're streaming from the one machine and the other machine is doing some number crunching so that it doesn't affect the stream and everything. And I'm hoping that we should be able to get the first project that I want to work on is some sort of a large language model assistant sort of a thing. So that's kind of like the next big thing on the list to help with the stream. And we're kind of coming into a period where like the big ideas that I had for what I wanted to do for content, we've kind of done. So on the content side, it will probably be more like if something comes up or if there's like gear that we want to talk about. Stuff like that. Can you buy it? Do you not like this microphone? Because I don't, why would you buy a bigger microphone? I don't understand. I have the microphone that I use when I do you say that this one, it is. Well, it's because of this, it's because of the foam thing. See, without the foam thing, and it actually probably sounds a little bit better without the foam thing, right? It was very different without the foam thing. But I don't want to have when I'm doing P's and T's to have like that breath. So I keep the windshield on. It's probably a little louder too. Anyways, the question was, yes, I make more than 6 figures with my day job. Like, I don't like, I'm one of the people that I kind of feel like it works to your advantage when you're having success to be quiet about it. You know what I mean? But I'm making enough to be like fully funding my retirement accounts and things like that. Like I'm saving insane amounts of money right now. It's crazy to me how much I'm saving. But the only reason that I'm willing to talk about that and bring that up is because you need to realize that futures trading is a really great wealth enhancer, but it is not a really great wealth builder. So if your idea of becoming a millionaire is going to come from futures trading, probably go back to the drawing board. Maybe you can do that with options trading. You maybe could. But yeah. Options 100%, yeah. Because if you get big in options, you can just, so all of a sudden you make $100,000. It's insane. Why not cryptos? Yeah. So I actually did make some money in crypto. Like just about each what do we call it, season rise, whatever, we made a few thousand. It's kind of been overbought since 2017 now, and I'm just like so sick of it. I just don't want anything to do with it, to be honest with you. I feel that the cryptocurrency market is just a complete and absolute fraud now at this point, that the exchanges are all involved in fraud, and even if there's a possibility to make money in large amounts of money, I don't want anything to do with it. I still have my Patreon, where I will regularly post my analysis of what's going on in the crypto market about once a month now. It used to be like every day, but now it's like once a month. And I only have like a handful of subscribers. I used to have a ton of subscribers, and then the pandemic kind of killed that. and after that, I kind of was just like, I don't know if I care anymore. Sorry for those of you, but I still post it because there's a few of you that are paying for it, and I'm going to keep doing it. And I'll post more often when there's something going on, but right now, like, just nothing happens in the crypto market. It's really crazy. I'm proud of you myself. Thanks. What is this you got here? NVIDIA GTC? Mark your calendar for March 18th to the 21st when we return to the San Jose Convention Center. Stay tuned for more details, in-person and virtual programs coming soon. So it's like a developer conference. Oh, NVIDIA has a conference. Around the Jetson line, I want to go to it. Ah, yeah. How did you realize that the crypto market is full of absolute fraud? Okay, so I have a model that tries to value Bitcoin based on the amount of money going through the blockchain, because the real value of Bitcoin is that it allows you to make transactions. I think that it's actually not as cheap of a way to make transactions as they all say, because it takes a lot of power. It's just not very efficient. But it is a way to make transactions, and that is worth something. And the historical valuation that you're getting based on how useful it is to make transactions with it has had it unusually high now, basically ever since just after the 2017 crash. And I was research trying to figure out what that is, and the only real reasonable explanation is that Tether is printing money, basically. Tether is printing tethers and buying Bitcoin when they don't actually have the dollars to back them up. They're making loans to people, and the people are going out and buying it. And that's how I came to that realization. So my model suggests that there's something fishy going on. And then you start digging, and then the more you dig, the more that just everything, like the whole Sam Bankman-Fried FTX thing, because there's so many people pushing the FTX, and then it's an absolute fraud. Yeah, point of control forming there. It does kind of look to me like the meta order might be done. And it's around that time anyways, right? I'm feeling a little ADHD to, it's because I got all screwed up. I didn't get here on time and stuff. That was another reason why I didn't really take trades, is because it started late. But I feel like I'm being ADHD, and like I'll have some thoughts and points I'm trying to make out to you, and then I won't finish them before I move on to something else. I was saying, futures trading isn't a good wealth builder. It's a good wealth enhancer. Oh no, I did cover this. Yeah. So it's important to realize that I have a high earning day job that is, it's not just like above the average income. It's even for those of us in tech, it's at the higher end of the scale. And that's what allows me to be able to take on the kind of risks that I do. How much is that? I don't know if I should give you the exact amount, but it's on the higher end of the 6-figure, over 100,000 range, right? So it's more than 150, but less than 200. What was the attraction? I don't know anymore. But I can tell you how it happened. Was I was really into politics, just because that's what I would read online, I guess. And then the financial crisis happened, and I said, well, in order to understand this correctly, to understand what's happening with politics, I think I need to understand things about finance. And so I started trading and learning about the stock market. And I realized that was like just more interesting, and that I wanted to do that. And so I basically dedicated myself to someday I'm going to trade, or someday I'm going to manage portfolios, or whatever the deal is. I'm just going to learn as much as I can about that space. And that kind of led me to where I am now. Yeah, the way that I should put it, I shouldn't be trying to give you numbers. What I should tell you is I'm a site reliability engineer. So just go on like the Stack Overflow developer survey and look up what site reliability engineers in the United States are making. It's basically like the highest paid position in the industry right now that's not management. Hey Salim, welcome back. I trade futures because it's fun and entertaining. Well, yeah, and it keeps your mind active, and you do make a little money. I mean, it's always possible to strike it big in futures, of course, but I think you're kind of hitting it. Is that like the big advantage of futures trading is that it's the most involved that you can get, right? Like you're watching every move on the floor, seeing what's happening. And the view and perspective that gives you about the markets is tremendous, especially when you're watching the interest rate market. you can make so many other decisions about what's going on. For instance, what you need to do if you're trying to buy a house or refinance and all, you will make better decisions because you're actively involved in the futures market. So I would say the amount of money that I've actually made from futures trading itself is minuscule, but the amount of money that I've made in terms of, you know, buying my house and when I did and how I dealt with the interest rates and everything else like that is almost priceless at this point. I mean, hundreds of thousands of dollars, because the reality is that I got myself owning a home and at an extremely low interest rate and at an extremely good price purely because of what I knew about the markets. That I knew that was when I bought it in 2017 or whatever it was. I think it was before that. I think it was 2017. That was a good time, and that the houses were going to be more expensive to build in the future, the interest rates were going to be higher in the future, and that there was all of the other millennials were getting in, and so I needed to get in before the other millennials, right? So I am able to own a house, and I think it's quite a nice house. It's not huge. It's like 3,600 square feet, but it's not huge, but it's a nice house and most millennials can't. There's many people that are in the same situation, maybe even in tech, and they can't afford a house because they waited too long, right? Where are your slabs of gold? Too much hands-on approach can be judged. Well, yeah. I think eventually you'll figure that out, though. As I was always saying, I really think that we should have like a once a week. We actually, because on Mondays we usually don't have a whole lot of going on. So I kind of feel like Monday should be like our stock research day. That we should go through and try and research stocks. And maybe even we can spend some of that time like doing a little bit of spreadsheets and valuations and stuff like that. Why would Salim delete his hello message? That's weird. This guy asks, which of your videos best describes what type of chart/system is best? Okay, which video should we send him? It's time for me to get going. You answer really well. Well, thank you. I'm practiced. You know, we've been doing this for 7 years. I really just absolutely love the fact that we have a relatively small, tight-knit stream. You know, because there's only, right now it tells me that there's 16 concurrent viewers, but about half of you are actually speaking. Like, I bet you that if it showed me the names of all of the 16 that are currently viewing, that I would recognize the names and know who they are. You know? That's a real benefit. And it's kind of weird how, like, it's like YouTube just wants me to stay at 16. So this is like, if we go too low, it starts sending more people. It's so weird. It's so weird to me. Okay. Your channel. Yes, this one right here. This one right here. Why technical analysis fails? Yep, there you go. I'm gonna give him that video. Let's see how he reacts. You don't want people to follow your secret sauce. That's what I when I was working on the video yesterday, this is basically what that's how I ended it. I was like, well, like, look, you can find an edge through the charts and technical analysis and everything. It's just like super hard to find. And if you do find it, you should keep it to yourself. Except for, you can tell me, you can always tell me. I won't tell anybody else, I promise. Okay. And I promise that I won't size the strategy up too big either. Okay. We'll work out. We'll say like, you can trade this much and you'll be able to trade more than I can right? But we'll make it so that the combination of us isn't more than what the market can support, right? But I won't share it with anybody. I don't know. I'm honestly, I'm a little bit apprehensive about it because I know that it's gonna launch a mob. And maybe I want to give it a week to, like, you know, work on the script a little bit more and stuff. I don't know. But, like, I think I gave a pretty good, like, wrote a pretty good conclusion. So probably after the stream here, I'll go read through it again and practice it and see if I still... Oh, no, because I need to make it funnier. Definitely need to do a pass like that to make it funnier. More engaging. So maybe it won't be this week. We'll see. We'll see. My face. I paused it at such a funny frame. Does Kinetic have some significant differences from CQG? My understanding is that it does. When I was on Kinetic, I didn't really like it. Angle it out to different body. Well, I will like zoom in on the face, in and out on the face and stuff to handle that. Do it in the outside yard. You just want me to show you stuff about outside my house so that you can try and figure out where I live, don't you? I'm using Edge Clear, and my data provider is Rhythmic. No. I'm hoping next year, like we did pretty good on the yard this year. I'm hoping next year that the backyard will be much more lush and it will have lots of flowers everywhere and everything. And it will be maybe worth making videos out in there now. I remember you saying, well, maybe a long time ago, like a year ago I was. But I'm using Rhythmic right now. I'm sad now, security first. Could do it in the kitchen man, his name was on the tip of his tongue and now it's escaped me again. Graham Stephan. Can do it in have a part of it in the kitchen like Graham Stephan. No. Kinetic is provided by CQG, but my understanding is it's a little different from the CQG that you'd get like at Amp Futures. So I don't know what the difference is, but yeah, I'm working today. I should probably quit. I should probably leave. I need to give today let's put Markets Limp into the end of the week. Markets Limp into weekend. Yeah, I should get going. Guys, great conversation today. Oh, it was a good stream, even though it started like 30 minutes late and all of that stuff because of freaking Samsung. Hate it when it updates my phone. It pisses me off so much. But yeah, next week I think should still be interesting, so... Yeah, I got some work to do today. I've been doing some tests. I've been writing some tests, and writing tests in Angular is a little bit of a pain. So it's back into the fire. Stay excellent, team.